Hello, welcome to Crux Investor. We caught up earlier today with Adam Spencer. He's the EVP for Montage Gold. They are a Côte d'Ivoire gold explorer listed on the TSXV. He talks us through their rather rapid ascent listed in October to deliver a feasibility study by the end of this year. If you want our thoughts and opinions on the conversation, the company, its plans, what it's going to be doing with its cash, you can get that at cruxinvestor.com/club, where you can also find detailed company reports and analysis, which you might find useful. There's commentary from experts from around the world on a variety of companies and commodities, which you'll definitely find interesting. And there are summaries of interviews that we've done to save you some time. There are training courses to help you with your own diligence process. Most importantly, there's a thriving community of investors sharing their thoughts and ideas with each other in a nice, friendly, safe environment, free from trolling and abuse. If that sounds nice to you, and it does to me, go and join them at cruxinvestor.com/club. And we'd love your feedback too. So do give us a like, it'd be appreciated. Leave your comments below. We'll get back to absolutely everyone. And if you want to see precisely what we talked about today, do take a look in the description below. Adam, how are you, sir?
I'm doing well, thanks. How are you?
Pretty good, pretty good. Looking forward to this one. We I'd better let people know. We spoke with your partner Hugh back in,
yes,
I'm going to go November 2019, when you were a private company. You're now a public company. So I'm looking forward to seeing how you get on. But first of all, where are you? Whereabouts in the world are you?
I am in my kitchen in my home in Toronto, enjoying what I hope is the last few days of the lockdown that we've been under for quite some time.
Yeah. Are you the only one actually left in the city?
No, there are many people left in the city here. Thankfully, my kids have gone back to school as of earlier this week, so things are a little more quiet at home.
Yeah. We're my wife and I are counting down the days so all children are allowed back at school. In the meantime, we're all living together in harmony, he said with tongue in cheek.
That's what you have to say.
That's contractually obliged to say. Hey, well, look, Adam, why don't you kick off, give us that 1 minute overview of the company, and I'll pick it up with some questions, so see where you guys have got to.
Yeah, that sounds good. So what Montage is, we are a newly public company. We are focused on Côte d'Ivoire. We are a gold exploration company, well backed with a strong shareholder register, significant cash balance after a very robust IPO, and we are de-risking our flagship property, which is the Marondo Gold Project. It sits at around 3.2 million ounces of gold today, and that's after only 40,000 meters of drilling. So it is still a very early story, but in many other ways very advanced. And because of that, we're able to fast track it through a PEA, which is planned for April of this year, and ultimately a feasibility study, if everything goes according to schedule, by the end of this year, and as well as kind of advancing permitting milestones. So we have lots ahead of ourselves, but we have the team that has done it before in West Africa. It's the former Redback team. So we're set up with the money, with the shareholders, with the asset, with the experience, and that's kind of Montage in a nutshell.
Right. Okay. I'm keen to help people decode some of that, because I hear that story a lot, sure, especially West African gold, lots of them, right? We better start with understanding a little bit about why you're different. Okay. So when I spoke to you, you guys were private. Why did you start off going down the private route instead of just going public straight away?
Yeah, I mean, it speaks to the kind of approach and philosophy of the management team, and that's really starts with Hugh Stewart, our CEO, and Rick Clark, our chairman. Their approach has always been to take exploration a couple steps further than you normally see, to try to de-risk a project before you spend a lot of money on it. And that sounds relatively simple, but I think the impact of that is significant. And in the case of Marondo, the deposit is called Koné, and while the company was still private, and even before, several years ago, before they did the resource drill out to see if this was going to be, an ore body of size, they did some very early diamond core drilling to do metallurgical test work. And, so often you see junior companies come to market even prior to thinking about metallurgical test work. But because they knew that this was going to be a lower grade ore body, the met has to work in order for this to be a viable project going forward. And so that was, one of the steps that was taken even before they did any real significant drilling on it to define a resource. And so that was, the first kind of indicator of that strategy. And so, that was obviously positive. They did the initial drill out. They defined a 1.2 million ounce resource. And at that stage, they look at it and say, okay, well, this is call it 1 gram ore body at 1.2 million ounces. Is that enough? Is that big enough? Is that going to be economic enough? And so they ran, an early stage PEA internally. And what they learned from that was that, look, it needs to be bigger. And so at that stage, the approach was, well, let's not push this out into the public markets on a standalone basis. Let's do the next phase of work to see if it can get bigger. And what that involved was, while we were private, we did some more deep drilling to test depth extension of mineralization. And that gave us the confidence that, look, this is probably going to be a 3 million ounce or larger ore body. And based on the prior kind of very early economic work that had been done, that was the threshold at which, we had confidence that this can be an economic project. And that was the kind of catalyst to decide to take it public. So it wasn't until we had a good sense that this was going to be something that would work that we decided to take it public.
Right. Okay. That's really interesting because that's very rare. I mean, I can count on one hand how many mining companies have done that I've interviewed. Where'd the money come from to do all of that?
Yeah. So if I take a step back several years ago, so these assets were once held by Redback Mining. They were staked by Redback Mining. And then Redback was bought by Kinross. This is 2010. Kinross did none of their own work on the properties. Hugh, through different vehicles following the Redback exit, has done all the work on this over a 10 plus year period. The first round of significant work was done after these assets were bought by Orca Gold, which, as you know, Orca is focused on Sudan. They bought this portfolio. They were, at that time, this would have been 2017, 2018. That's when they did the early met test work. So a small portion of the capital spent on this would have been capital that had been raised by Orca. But then once Montage was spun out into its own vehicle, we raised $8 million privately. And that came from really us, insiders, directors, friends and family, Lucas Lundin, and just people that have been in kind of the Lundin Redback network for years. And so we started off very strong with a total of $12 million in cash when we first created the company in August of 2019. And that gave us, more than enough money to spend to kind of test the depth extension of the mineralization and set us up to take it public.
Right. Okay. So, well, Lucas Lundin, I mean, that's an interesting name to throw in there from the get-go. You've done 40,000 meters, you say? Or there's 40,000 meters of data?
No, it's 40,000 meters of total drilling that has been done on the Koné deposit for its entire life. That's it. And, it's notable that Koné itself was the very first anomaly that was ever discovered on this land package. And it's the only one that's received any, significant exploration work. So in one sense, it is an advanced deposit in terms of its size, but the exploration story is still very early stage when we think about the project as a whole. Okay,
and I do want to get onto the asset itself, I really do, but
sure.
Talk me through the rest of the team's experience. I get the, Redback, Orca connection, but who does what? Who's important for us to recognize?
Yeah, so Hugh Stewart, as the CEO, he is kind of the face of the company. He is the geologist that finds gold deposits. In his career in Africa, to his credit, he's discovered 35 million ounces of gold, which certainly puts him at near the top of the list in terms of exploration geologists in gold. And so his approach to exploration, I think, is very novel. He's not your typical geologist that just wants to find gold in the ground. He's always thinking about, I want to find a mine. And, the way he describes it is that it's actually pretty easy to find gold. It's, significantly more difficult to turn a gold discovery into a gold mine. And if you look at his track record of the 35 million ounces that he's discovered, 30 million of those ounces represent operations that are now in production. And the remaining 5 million, it's actually more than 5 if I think about it, represents Block 14 in Sudan, which is a grassroots discovery of Hughes, and the Morundo Gold Project within Montage, which was a grassroots discovery of his. So I think that is, something that people should really take notice of, is that this guy is serious. He's a very humble guy. He never really talks about his track record. I'm the one that does that. But he delivers. And so he's critical. And then in the background, we have Kevin Ross, who is the director of Montage. He is the chief operating officer of Orca Gold, and he was the chief operating officer of Redback Mining. And so, his career spans decades. He's taken numerous gold deposits from, exploration stage through economic studies, through construction, through operation, expansion. He's done everything from start to finish there. And so the tandem of Hugh and Kevin is very significant. And then, of course, we have Rick Clark as our chairman, and Rick was the CEO of Redback Mining. He is the CEO of Orca Gold, and he's an expert in capital raising, promotion of mining projects, dealing with government negotiations. He's kind of been the guy that has brought kind of all the pieces together for this group of individuals, and has had tremendous success in doing so.
Okay, what about you?
Yeah, so my background is mining capital markets, and so what I bring, I think, is a similar background to what Rick has been doing with Kevin and Hugh for the last 15 or 20 years, but from just a different perspective and I guess different pedigree, to put it in a different way. So my background was mining investment banking for the first half of my career, focused on financing junior and mid-tier mining companies across really all commodities, but with a focus on gold. And then for the last 7 or so years, I led up the corporate development activities for Sandstorm Gold Royalties. And so again, focused on highly structured finance to, essentially provide construction capital for significant gold projects. And so with that experience and background, I think it's a good complement to, what Hugh and Kevin do, and certainly what Rick has been doing throughout his career. And so I'm kind of brought in here to work more closely with Hugh on the day-to-day stuff. Rick's our chairman. He's not involved in the day-to-day kind of corporate, level activities of the company. He does what he does very well. But I'm there to kind of handle kind of the nitty-gritty day-to-day corporate kind of goings-on of Montage with Hugh.
Okay, excellent. Thanks for that. Let me ask you about jurisdiction. Okay, that's really, really important. West Africa has sort of been a sort of mixed bag of events. We've had COVID, we've had terrorist incursions across some countries across West Africa. North American investors slightly nervous about investing there, right? So you're in Côte d'Ivoire. Again, I think politically it's been sort of had a checkered past, settled down recently. How are you finding doing business in country? Are there obstacles? Are they trying to be helpful? What's happening?
Yeah, I would say, despite, the headlines that come out of the country, and certainly headline risk is something that we think about, it has been business as usual for us in country, with obviously some necessary adjustments to how we go about day-to-day activities to address COVID-19. When COVID-19 first took hold in the country, we did have to temporarily suspend operations, which I believe most of our counterparts in country had to do. And once things settled down, we got back into the project, and, we've instituted, company-wide policies for all various things to try to combat the spread of it. And in our immediate project area, there are no reported cases of COVID. Now, obviously that can change. All we can do is control, the safeguards that we put in place. And so that's more of a logistics and kind of timing exercise. We've had no trouble getting drill rigs to site. We presently have 6 rigs. For the prior drill program, we had up to 7 at points in time. I think we'll probably add another rig to this program where we're currently at. Working with the government has been very straightforward. I mean, nothing's really changed. As you mentioned, there's been some political, I'd say political risk, obviously. I mean, that just goes with investing in Africa in general. But we did just come through an election cycle. There was a presidential election at the end of October. And look, I mean, going into that, everyone was nervous what was going to happen. You had a 2-term president going for re-election. which sparked a lot of controversy. Now you had an opposition kind of groups of opposition that were relatively fragmented and couldn't form a solid opposition to run against the incumbent. And, the net result was a landslide victory, which was ultimately opposed and boycotted by the opposition. But, as time has gone on in the months since the election, everything's effectively settled down and gone back to normal, and it's business as usual for us. So, we're happy that that's behind us. It was a risk that we saw in terms of, the raising capital. Our IPO was timed to be a few weeks prior to that event, and I think we were very fortunate with the way things played out, to get the IPO done, but also more so to have a relatively stable continuation of power for the existing president. So,
talk to me about that, because your IPO was in October, and the raise happened at the height of this bull run that we're on for gold. In fact, you timed it well, because I think if you were having the conversation in January, February, it might have been different, right? Not because of the election,
absolutely,
but because of the pricing in the marketplace. So that was fortuitous. So was it just a case of people just throwing money at any gold project? What were people buying into? What were the funds buying into?
Well, in our case, I think, they were buying into, some, to a certain degree, household names. Right, like the vast majority of the share register that we brought in on the IPO were people that had invested and made a lot of money in the Redback story and were very familiar with Orca and just knew Rick and Hugh and what they've done and where they've been successful in the past. So that was what they were buying into. Now you're absolutely right. The timing, I think, couldn't have been better from a market perspective. We knew we were in a strong window for gold financings. We were seeing gold deals go up every day of the week. And when you've been through market cycles as much as, I have and the rest of us have, that these windows can close very quickly, and it doesn't take much for investor sentiment to change. And, we were facing obviously the US election coming up very shortly in that period, after the planned IPO, and obviously the Cote d'Ivoire election. So we were very focused on making sure that we had funds in the door prior to those events occurring, and we made sure that would happen, and it was very successful.
Yeah, absolutely, perfect timing. At 90 million market cap, by the way, the share register is quite tight. It's really tight. It's nice and clean. Yes. At 90 million market cap with a 3.2 million ounce inferred resource, do you think you're fully valued?
No, I think we are. If you look at us as compared to others in the space, we're actually trading at probably the lowest dollar per ounce of resource in the ground. And, I think that is, there's a few reasons for that. One, we're a relatively new story. We've got great shareholders that bought into the IPO, but it's been, I'd say, difficult given the market conditions to generate, additional institutional buying in the market. And that's not something that is unique to us. If you look at the junior, side of the gold market right now, the market conditions are very soft, and you have to be, you have to position yourself to be able to stomach those situations for extended periods of time. And that's another reason why we raised as much money as we did. We really raised, probably 30% more capital than we had budgeted for, just to give us flexibility to deal with situations like this, right, where you have softer markets.
Yeah, well, turns out it's wise move indeed. Let's talk about what you're going to do with that money, because we've had lots of questions sent in. People are asking about timing and approach, and where you think the short-term value lies versus how you intend to plan this out. You talk about being mine builders, right? So talk me through, how you're going to allocate this cash.
Yeah, sure. So maybe I'll take a step back to the kind of programs that we laid out at the IPO, because nothing's changed from those programs, and we've just been delivering on them. So at the outset, what we said we would do would be a total of 50,000 meters of drilling, or perhaps more, in two phases. The first being 20,000 meters to grow the resource. The second, 30,000 plus meters, would be to upgrade the resource from inferred to indicated. And so as far as resource kind of related work, that's one element of the programs. The second element would be the economic studies, and the first one being the PEA that will come out in April of this year. And it's worth noting that because, a couple of years ago, there was a true kind of PEA that was done internally by Orca, we've been able to advance the test work and studies from that. So internally, the study that we're going to be releasing will actually be conducted to a pre-feasibility standard. But because the resource off which it will be based will be inferred at the time, it will be called a PEA. And that's key because we plan to go straight to feasibility after this PEA, and it's only possible because the studies and test work within the PEA are actually PFS standard, and because we will be upgrading the existing 3.2 million ounce inferred resource to indicated, we can then calculate a reserve off an indicated resource. So that's why we can fast track this project. Where we're sitting right now is that we've completed the initial 20,000 meters of drilling. That took the strike length of mineralization of the deposit up to 2.4 kilometers, up to 450 meters wide at surface. That allowed us to recalculate the resource. We went from 1.5 million ounces to 3.2 million ounces. So we delivered on the objective that we had set for ourselves. And we've been executing on, the studies and test work for the PEA. And I'd say the PEA is probably around 2/3 complete at this stage. We have been releasing results of studies as they have been completed. We had a very positive geotechnical study results, which allows us to steepen the pit walls of the deposit, which will lead to a lower strip ratio. We're nearing the end of the metallurgical test program. It's showing us that the rock is soft from a grinding perspective, so lower process cost. It's looking at the recoveries are going to be quite reasonable. So obviously that has a major impact on your economics. So things are going well. We're executing on the plans that we set out for ourselves. And, based on the objective to have a feasibility study completed by the end of this year, we should still have, probably somewhere between $8 to $10 million in excess cash left over upon completion of the feasibility study. So we'll still be in a great position financially.
Right. And do you think you're going to have to do a job and be clearly communicating why you're skipping a stage? Because people will look at, they're fast tracking it. They're going to, shortcut the process. Therefore, that will cause problems down the line. So that's going to have to be a big thing that you're going to spend a lot of time explaining. The way you've explained it, it makes sense. But
yeah. To us, we think the story is quite simple, but it does require, I think, in some cases, lengthy explanation. But once you get your head wrapped around, the attributes of the deposit and the project itself, I think it does, the audience tends to kind of draw the conclusion that, look, this is a pretty simple project. We are, in my mind, we're in a bit of a vacuum in terms of the information we can put out there. It's not until you have a PEA published that you can actually say, hey, look, here are the results of what we've been working on, with some numbers on paper that are backed up by sound engineering and test work that demonstrates that this ore body can be quite economic. And it's not until we publish the PEA that we can really say that, right? We can try to show the incremental steps that we're taking to get there, whether it's doubling the resource to 3 million ounces, showing that we can steepen the pit walls, all of those things, they all have input. They all have an impact on the economics, but it's not until you finally publish something that you can really say, this is what we told you to expect and we're delivering on.
Right. It's good stuff. PEA plus or minus 30% on the economics, but it's the feasibility that people will be looking to get a sense of what it is that you're creating. And what's the reality of this? I know you talk the language like everyone does. We're building this thing to be a mine. Okay. It's looking at the amount of activity, the amount of M&A activity, Chinese companies scouring West Africa for acquisitions. The easy win for you is just to keep building out that resource. Is that what you're going to do with your 8 million spare cash?
There's a number of things that we will do with it. I think, first and foremost, we are operating on the assumption that we're going to continue to advance this project. And if that, means financing it and building it, then that's what we'll do. And we have all the team in place to do that. I think what will, other ways that we can demonstrate value beyond just de-risking, a single deposit and a project based on it is to explore the broader land package. And so certainly, with the excess cash that we have a lot of flexibility to ramp up exploration activities. In total, the project land package is around 1,400 square kilometers. Now, let's say 300 square kilometers of that is a license. The rest are applications. But because we are so well funded and we're being so aggressive with the project, I expect that we will get those applications granted as licenses. We're pushing very hard for that. And we know of anomalism within that ground. It would be truckable to a mill situated at Koné. And so that's kind of the blue sky potential that we intend to develop. And again, we're fully funded to explore within the land package. And I think once we have that ground granted, we can start to show people that, look, you have a standalone, robust operation based off the 3.2 million ounce Koné deposit, but that's just the start. There's a number of satellite exploration opportunities that would be truckable to supplement feed into a mill, potentially at higher grades. And that's another key aspect of the strategy that we'll be pursuing.
Right. But at the same time, Rick Clark's that, so he's got an agenda. He's got his day job, but he's also sitting here helping you guys. So are there conversations about what could be further down the line in terms of two companies coming together?
Well, Montage was born from a spin out of Orca. And so Orca retained their interest in Montage, as consideration for spinning the assets out. So, I can't dismiss any potential possibilities down the road, but certainly the reason for separating the companies was so that Orca could finance and advance Block 14 in Sudan without there being any dilution to their shareholders associated with financing and advancing assets in Côte d'Ivoire. So to see them come back together would be, I think, a bit of a surprise to me. But look, I can't dismiss the concept.
Okay.
I think what's more likely here is that as the project gets advanced, if there is significant valuation re-rating in the market, if there is interest from potential acquirers to take us over, I think the first place you go is you talk to Orca, because they own 30% of the company, right? Any kind of M&A activity would really start and end there, given how concentrated the shareholder base is and how significant Orca's ownership is.
And how are Orca for cash? Would they consider selling or offloading what they own?
Yeah, I think that's probably a question better asked to Rick or Hugh. Hugh's also the president of Orca. I'm not, directly involved with Orca, but from what my understanding is that at these valuation levels, it's not something that they would see as making sense to monetize to generate cash. Now, if there's a significant re-rating, could you revisit that assumption? Sure, but I'd say at these levels, I don't see that happening.
Right. Okay. And do you think the market is appreciative of these low-grade bulk companies like yourself? Your average grade is what, 0.8, was below 1 gram per ton, right?
Yeah. I'd say they do. They're not as appreciated. I think they tend to be, or they have, it's possible that they get dismissed. I think it's one of those things where you don't get the benefit of the doubt, quite as much as you do if you have, higher grades. And, I can understand that. Everyone says grade is king. And, that's not false. It's, by no means would we say no to having higher grades. Like, absolutely, we'd love to have higher grades. I think the satellite pit exploration strategy will certainly be to bring in supplemental feed at higher grades. But even beyond that, there are so many other factors that make a project work. And there are a lot of higher grade projects that don't work, right? You could have 3 grams per ton in a resource, but if it's refractory, it's not going to work, or it's very likely that it won't work. It could have, a 15-to-1 strip ratio. And again, that may not permit it to be feasible. So for us, where I think we will come out positive is that, yes, it is a lower grade ore body. The average grade is right around 0.8 right now, but it does have a higher grade component. So of the 3.2 million ounces at 0.8 grams, there is around 2 million ounces that sits at 1.1 grams. And what that enables us to do is to mine the ore body at an elevated rate, stockpile lower grade, but process higher grades closer to, call it 0.9 to 1 or even 1.1 grams for the first, call it 5 to 7 years of the project life. And that has a major impact on the economics. And so since you mine out the ore body over a shorter period of time, the lower grades that you're stockpiling, they've already been mined. You're just processing them at the end of life. And so the economics can work quite well doing that. The other things that are working in our favor, as I said before, the pit walls of the open pit can be, probably upwards of 55 degrees, both hanging wall and footwall. And that allows us to have a strip ratio that's going to be closer to 1-to-1. Whereas, a lot of, if you look at most open pit projects in West Africa, their strip ratios are, 5-to-1 or higher. It really varies. So that's another thing that's working for us. And then, as I said before, the metallurgical test work has come back showing that from a comminution perspective, the rock is relatively soft, which means lower power consumption to grind, low reagent consumption, low cyanide, low lime. And so those are all major inputs into your process cost. And again, with low process cost, with the large scale operation, with the low strip ratio, it just drives the pit lower or deeper. And so, it's very likely that this resource itself could grow even further beyond 3.2 million ounces. So all of these factors are interrelated. We're fortunate to have a lot of these factors working for us. And, the net result, we think, should be a very robust project.
Yeah. I think people don't necessarily appreciate some of the things that you've said. Yeah. And again, it's another message that needs to get out there. I think some companies have come on and told us this story. They're a bit nervous that people they like the big eye-catching headlines and they don't understand the process. But there are some wonderful case studies, Equinoxes of this world, which I think people should be looking to. Can we just talk about just a couple of the projects? I'm about to butcher their names. So it's Bobosso, Korokaha.
Korokaha and Bobosso. Yeah, so you got Bobosso right.
Yeah, good. Yeah. Okay. So how are you approaching those? Because that was a question sort of sent in terms of, again, sure. Emphasis on each.
Yeah, so I'll start with Korokaha. So we have the Korokaha North and Korokaha South exploration licenses, and then there's the Diawalla application, which is just to the north there. And so we've been doing early exploration work there. The Korokaha North license has an 8-kilometer strike length soil anomaly. We call it Badenu. And so we've been doing some infill soils on that. It's getting to the stage now where we'll likely do some drilling on it to see what's there. Most recently, we had the Korokaha South license granted to us, and we've gone in to do some initial soil work on that. We've identified some anomalism there, so there's follow-up work to be done. But I mean, just by the nature of where these, the level of work that's been done there, it's certainly not to the same level of priority as the Marundo Gold Project is for us. But at the same time, you have these exploration licenses for a fixed time frame, and you have to work them. So we will get in there. We'll do additional work. We'll see if we can develop some good drill targets on that initial soil anomaly in Korokaha North. And what's interesting about that is that it sits within 15 kilometers of the Tongon mill, which is a Barrick operation. And that's an operation that's getting down to its last 2 or 3 years of reserves. And they've been talking about trying to extend the mine life there. So, if we're able to demonstrate that there's some interesting drill targets here with some potential, given its proximity to the Tongon mine, I think that's, an asset that starts to have some strategic significance and importance for us. And so we will advance that and see how that comes together. And then Bobosso, which you mentioned, so that sits kind of more on the eastern side of the country. It sits on the southern extension of the Houndé Belt. And the Houndé Belt, if you're familiar with Burkina Faso, hosts a number of producing operations, and it's quite a prolific gold region. So, same belt of rocks extends down into Côte d'Ivoire. We have essentially the first available land package just south of a protected forest reserve. And that's ground that was worked on by a private company called Avant Minerals, I was running that company, and we merged that entity into Montage. And, there's some very interesting, shallow, higher grade intercepts there, 2.5 to 3 grams per ton. It's a lot more structurally complex. There's a lot more work to be done there to really better understand it. And hence it's going to cost kind of more to do that. And so that's, in terms of level of importance, that would be kind of more so, on the back burner for us. I think given the market environment, for juniors and the appetite for exploration in Cote d'Ivoire, there's an opportunity for us to potentially sell that project off, spin it out into a new vehicle with a management team, things like that. But it's not something that's going to distract us from capital allocation to Marundo.
Okay, fantastic. Adam, really appreciate that catch up. Obviously, things have progressed significantly since when we spoke with Hugh. Stay in touch. Let us know how you get on. Looks like you've got a busy few months ahead of you.
Yeah, thanks a lot, Matt. Just to summarize kind of where we're going, where we started, and how we're going to get there. So, we IPO'd in October. We raised $35 million, and we set the expectation for ourselves that by the end of 2021, we'll have a feasibility study completed on this project. It's certainly an aggressive timeline, but it's one that, based on our track record, the people involved, we're confident that we can deliver on that. And, as far as what we've done so far, we've done an initial 20,000 meters of drilling. We've doubled the resource to over 3 million ounces. We're now doing the follow-on 35,000 meter drill program, which will have results coming out from that, relatively regular intervals. We are pressing forward with the PEA, which is, effectively a PFS that should be released, call it mid-April. And it's because of the advanced nature of the study that allows us to fast track to feasibility. So we're not cutting corners anywhere. We're just, advancing a project and that's, was significantly de-risked even prior to taking it public. And, as we spoke about earlier, just the approach that we take allows us to advance a project, I think, a lot faster than you would, normally see a junior do. And I think we're quite set up well for that.